Any conversation about global trade in 2025 has to begin with tariffs.
China, 67%.
Then tensions, followed by volatility, uncertainty, and risk. Businesses are bracing for impact. Governments are scrambling to react. Central banks are planning for whatever comes next.
The outlook for growth has deteriorated owing to rising trade tensions.
But through the noise and headlines, goods keep moving across oceans to reach consumers. And Japan's largest shipping company is staying the course.
Such changes has been always happening for the shipping business.
Nippon Yusen Kabushiki Kaisha, NYK, began operations in 1885. It's grown to become the fifth largest shipper in the world by revenue, thriving despite disruptions including wars, financial shocks, and natural disasters. That history puts 2025 in perspective.
Even though the current problem like geopolitics or even Trump tariffs, still the people's demands for the shipping never change. So from that viewpoint, I don't think this is a real crisis at this moment.
CEO Takaya Soga and CFO Akira Kono are NYK lifers. Both of them started at the company in 1984, and they took their current roles together in 2023. They're used to facing challenges as a team.
Of course, it's a headache for us and for me as well, but I am confident to find such a way of continuing the business itself. I am a kind of the guy, a little bit too much optimistic.
That's a good thing.
No.
That's a good thing. But when you're talking about all of these global headaches that you're facing, how important is it to have really a trusted partner when it comes to the chief financial officer?
Even though I say the very optimistic future or plan, always he is making the very bitter comment on that part. And then it is quite good for me to review quite objectively, this issue is okay or not, or this would be okay in 10 years later, or that is quite helping.
だけど来週 IR にまさにニューヨークと今回は I try to be the optimistic as well, but as the CFO, I'm trying to be anxious and prudent. At NYK, the CFO's role is not only for the financial oversight, but also the working together, collaborating with the CEO.
With a diverse portfolio of businesses supported by a fleet of nearly 900 vessels, NYK has a solid foundation for sustained growth, even at a difficult moment for trade. Its CFO plays a critical role in setting a path forward and keeping it on course.
He's a really important partner for me, for management, not only for the financial area, but also looking at the next decade or even the 2 decades, what our company should stand and also what direction should be most appropriate. Always we are discussing together.
NYK is coming off a strong 2024, with revenues and profits both rising significantly year over year. The company knew tariffs would have an impact in 2025, but how much? Its initial forecast put the hit at anywhere from 0 to 100 billion yen.
It was very much uncertain what happens on our business. We calculated many, cases. Then we set maximum 100 billion Japan yen. That's negative impact by the U.S. import tariff.
After the first quarter, NYK reset its guidance, predicting the drag from tariffs on recurring profit will be 24 billion yen in 2025. Meanwhile, it's forging ahead with plans to advance its core business. A major investment target is liquefied natural gas, expanding a fleet that's made the company one of the world's leading LNG carriers.
Why is LNG such a key focus for you?
Everybody is looking at energy transformation from the viewpoint of the decarbonization. LNG is a very much important for the transition type of the energy. In line with that, inquiries about the new business about the energy transportation is also increasing right now. We received a lot of such a proposal. So from that viewpoint, we need to expand our fleet.
When we talk about global LNG, there has been certain tailwinds because of some factors that are policy-driven, as well as some drive towards more reachable goals in the midterm for energy mix in countries like Japan.
Global LNG demand has been steadily rising. Still, Bloomberg New Energy Finance predicts that by 2030, a wave of new supply projects will create a glut and drive down prices. NYK says the stability of LNG contracts shields its business from these shocks.
Of course, we have some cost fluctuation. That's a risk. However, compared with the other shipping business, it's a very stable and long-term contract.
Even if there is let's say, a drop in LNG prices, then we will probably not going to see as much change in LNG import because there is countries like Japan that has significant volume locked into things like Brent oil-linked price or Japan crude average.
Its energy business is expected to provide 20% of NYK's recurring profit in 2025 and reach 30% by the end of the decade. The LNG push dovetails with a key pillar of NYK's strategic plan, its Sail Green initiative. While setting a goal to achieve net zero by 2050, Sail Green also pursues growth through investment in decarbonization technology and renewable energy. That portfolio is the responsibility of the CFO.
I'm directly in charge of the sustainability issue, like the ESG, and especially the decarbonization. That's one of the big challenges for the company to achieve the net zero by the 2050.
The fact that we're seeing some sort of backlash globally, especially in the United States, against some of these ESG targets, does that take away the momentum of some of the work that you're doing?
Yes, I feel the situation has been changed slightly, but in the long run, I think decarbonization and climate change is a very, very important issue for the companies and also global.
Despite trade tensions clouding the horizon, Kono is confident he has the resources to steer NYK's finances through any turbulence that results.
During the COVID-19 pandemic, especially the container business and the car carrier business, the supply and demand was very, very tight. That's why the rate was going up dramatically and almost a skyrocket. So then after the COVID-19 pandemic, we have the strong balance sheet and strong liquidity. So we can think about what happens next.
This healthy capital position has given NYK the opportunity to boost shareholder returns. It's seizing the moment, raising the payout ratio and the minimum dividend per share, and introducing a new buyback program.
In order to grow our operation, we need investment. So now it's a kind of a balance. We reserve some portion for the new investment, for the growth. And the other part is we return our profit to our shareholders. And our current market cap is not so satisfactory. So that's one of the points. And we decided to increase the distributions and also the share buyback.
Do you have a target in mind when you think about your market cap?
At the moment, our PBR is below the 1.0. So then I think at least our company's value and enterprise value should be more than 1.0.
There's another reason NYK is paying close attention to investor relations right now. Shareholder activism is on the rise in Japan.
We have seen the increase of numbers of activist campaigns in the last couple of years. And what we have seen is really the evolution of the agenda from a more confrontational approach to engagement-based approach, asking for better capital allocation and then also better communication to the market, which has been, I think, one of the discounting factors for Japanese corporates. The focus has shifted towards a long-term value creation rather than short-term.
Soga and Kono have both been spending time speaking to shareholders and hearing their concerns.
Both of us are doing IR. He is going to the New York, I am going to the London. Like that, actually we are talking always together, and then what point we need to focus in front of our investors.
We have not received the shareholders' proposal at this year's General Assembly meeting, but basically, when I had the IR investor relation meeting with the Japanese investors and the foreign investors, sometimes they pointing out the low ROE and the return on equity, and also the disclosure on each business sectors.
We are doing a very, very necessary investment on our future growth of our value. At the same time, we also pay the return to the shareholders at the same time.
Does it at the same time also help keep these activist investors who have been very active here in the Japanese market recently at bay?
That is one of the ways of protecting ourselves, I think.
Coming up, a peek at the next generation of NYK vessels that will make shipping greener. CFO Akira Kono takes me aboard the world's first commercially operating ammonia-powered tugboat.
LNG can decrease emission of the carbon dioxide compared with the heavy fuel oil, the 25% more or less. But ammonia, 95% decrease can be achieved.
This is Bloomberg. Akira Kono has spent his entire professional life at the global shipping giant NYK, stepping into his current role as CFO in 2023. When he showed me around the company's container terminal in Tokyo, it was more than a tour, it was a homecoming.
So I feel the nostalgia. I joined NYK in 1984, and I started my career from here.
Kono's career path at NYK has taken him to several different parts of the company and several cities around the world.
I worked in London, and at that time I was in charge of the energy sector, and especially the energy business. And before that, I used to work in the States and New York City, and for the car carrier business.
In 2024, the liner and logistics business accounted for almost half of NYK's total revenue.
This is the NYK Venus, 2,000 TEU capacity. And,
that segment includes container shipping, which draws strength from a partnership formed nearly a decade ago.
In 2017, we decided to merge our container business with the other Japan's liner business, like the Mitsui OSK and the K-Line, because the other time our scale was not so big to compete against overseas competitors.
NYK is the primary shareholder in this alliance of Japanese shippers called Ocean Network Express, or ONE. It's now the world's 6th largest container shipping line.
After COVID-19 pandemic, and they generated significant profit. And then they expanded the global network. The efficiency is much more than the one we used to operate alone. That's a big change.
As part of its Sail Green initiative, NYK has committed to expand its fleet of alternative fueled ships. Right now, that's mainly LNG. At the same time, it's developing and testing green ammonia and other next-generation biofuels in an effort to speed up the energy transition. A few miles south of the container terminal at the port of Yokohama, NYK's sustainability efforts have produced a breakthrough. The tugboat Sakigake is the world's first ammonia-powered vessel in commercial use.
LNG can decrease emission of the carbon dioxide compared with the heavy fuel oil, the 25% more or less. But ammonia, 95% decrease can be achieved.
According to Bloomberg NEF, ships powered by LNG and other alternative fuels make up nearly 40% of the global shipping order book. The industry is working in partnership with governments to scale up its decarbonization efforts.
Investment in alternative marine fuels have soared extraordinarily. We have seen strategic corporate initiatives multiplied by almost 28-fold, and also venture capital and private equity investors have poured in around $2.2 billion just in the past 4 years alone. The large shipbuilding nations like China, South Korea, and Japan are setting up national programs to support the transition.
This is funded by the NEDO, so-called Japanese agency, and also the NEDO has the kind of the GI funds and the Green Innovation Funds. And also the Japanese government is supporting the usage of the ammonia as the power generating fuel.
It's more expensive than normal standard fuels.
Yes, it is. And at this moment, and the supply of the ammonia volume is very much limited compared with the LNG and also the heavy fuel oil. But in order to promote ammonia as a marine fuel, together with the other industry players, and we can have the kind of the mass production, then the cost will be decreased. The next year, we expect to have the large-sized ammonia carrier powered by the ammonia, and this is also supported by the GI fund. Then the next 10 years, we try to increase the number of the vessels powered by the ammonia.
Coming up, tariffs aren't the only tool the U.S. is using to impose its will on global trade. Shipbuilding is another battleground, and NYK has a stake in helping Japan succeed.
Sometimes we are working together with our customers as a partner, and if they prefer Japanese shipyards, that's good for us because we are the Japanese ship company, and we have the very good relationship with the Japanese shipyards.
This is Bloomberg. The global shipping industry has spent 2025 dealing with escalating trade tensions around the world. Tariffs have gotten by far the most attention, but the U.S. Trade Representative has also announced it will impose port fees on ships linked to fleets with Chinese-built or Chinese-flagged vessels in a bid to diminish China's dominance in shipbuilding. Bloomberg Intelligence estimates these fees could cost container shippers $10 billion annually.
At this moment, almost 8% out of our total fleet is made in Chinese shipyard. So therefore, operationally, it is quite okay for us. We can just have those vessels operated in the other trade. But for future shipbuilding plan, some of the ships like LNG carriers, that is not able to build up in Japan right now. And all those opportunities are given to the China and Korea. And the majority of our fleet of the LNG carriers are made in Korean shipyard, and a quite small number is Chinese shipyard. Basically, we would like to make order to the Japanese shipyard, even from the viewpoint of the national security. But for like LNG ships, which is now only possible to build in Korea and China, we may have a chance to place an order to China.
Our business, sometimes we are working together with our customers as a partner, So then they have their own preference. And then if our customer prefer to have the vessels built in China, then we work for that. And if they prefer Japanese shipyards, that's good for us because we are the Japanese ship company and we have the very good relationship with the Japanese shipyards.
China's share of new shipbuilding contracts did take a considerable hit in the first half of 2025 after the USTR announced the fees. Goldman Sachs told investors it sees these levies as an opportunity for Japanese manufacturers to gain market share and notes that benefits could carry over to the nation's shipping companies.
Does a thriving shipbuilding industry also mean a thriving NYK shipping transport?
Yes, that's right. Particularly the Japanese shipyard industry is getting weaker and weaker in the last 20 years. So therefore, it is a role, very important role of NYK to support them to revive their industry in Japan more and more.
As NYK navigates challenges and steers through headwinds, it's counting on CFO Akira Kono to keep a steady focus on the future. I asked him what he sees when he looks ahead.
What's the opportunity for NYK that most excites you in the next decade?
We are promoting the decarbonization shipping very much. And now we are having LNG fueled vessels, and that will be increased in the coming years. But beyond that, we need carbon neutral vessels or the zero emission vessels. Then that's additional value for the customers and for the shareholders and stakeholders. That's a big business opportunity for the company, I think.
What's the challenge for NYK in the next decade that you're most concerned about?
One is to expand our core business. And the other point is to explore the new business opportunities, like environmental friendly business, like the offshore windmill projects and alternative fuel projects. That's still the challenge we have. So then to allocate our capital to those two business areas with balance, that's one of the challenges, I think. And I believe that we can overcome such challenges, and I believe the company can grow further.
Complete this sentence for me. The hardest part of being a CFO is?
To make the balance between the rigorous financial discipline or the oversight and also the fostering the new business growth. That's the biggest challenge for me.
You have a friend and they call you and then they say, I got promoted to becoming a chief financial officer. You congratulate them, but then what's the first piece of advice that you would give them?
Probably I would say, and that's a very comprehensive role, not only for the finance, but also the business itself, the inside of the business, working together with the partners and working together with the colleagues and other managements. Communication is very, very key for the role. That's my word for the new guy.
I'm Sherry Yan. This is Bloomberg.